Hello traders, Gary Wagner here, approximately 1:30 in Honolulu, 7:30 in New York. It is Monday, 9th day of August, 2021, and this is the daily report for gold and silver. Following the jobs report, which came out on Friday, we saw a cascading effect with brutal downside action in gold, actually taking it down about $100 in a single day. The total carnage was immense. We will talk about that. We will look at a short-term chart to show you how quickly the market itself eroded on today's show, which begins now. There is no doubt we definitely saw chart damage on a technical basis created by the fall on Friday and a continuation of lower pricing today, with gold touching a low of $1,677.20. Now, it did recover slightly, gaining $68 back of today's fall, and is currently at $17.3160. While dollar strength contributed some very, very mild headwinds, gaining 0.2%, considering that gold sold off by 1.8%, it accounted for very little of today's decline. But the greatest percentage drawdown of platinum, palladium, gold, and silver, the precious metals traded on the futures market, was silver, losing 88 cents on the day. That's a drawdown of 3.62%, and we have September futures currently fixed at $23.44.5. You can see by looking at this 10-minute chart that although trading opened lower from the get-go, for the first 40 minutes, and we can say that by looking at the beginning of the 8th, that would be this marking right here, it didn't sell off that much. But in a 20-minute period, we saw it trade from just about 1755, which is right here, down to these lows below 1680. From there, it was a slow and methodical recovery, and we did close at $1,730.80. Quite a sell-off in a brisk and short period of time. What you're watching is a quickened animation of the sell-off between Friday and today.
Oh, my mama told me there'll be days like this.
So the question traders need to ascertain, is the worst over in terms of the fall itself? Is it overdone, or will we see more selling follow? Now, one thing that we have to acknowledge is the fact that when the market did recover, it recovered right at the 78% retracement. You can see that it's just opened in Australia. It is 6 o'clock in New York now, and it's trading just above that. But assuming that these recent lows do not hold and we see the market actually go lower, we're going to have to go back quite far in time to look to see where this market could take us. Historically speaking, there is some evidence that the low achieved today matches up quite closely with not only the lows back in March, that double bottom, but also back in 2020 between March, April, May, and June. Below that is 1575. So on a technical basis, if we break below current lows that came in today, we could see the market track as low as 1575 to 1600. Otherwise, we could see some support come into the market based upon these series of lows and there being historical data suggesting that this is a strong level of potential support. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.